Happy Tuesday. It's Deb Pervin with another Tuesday Tweak. Today we're going to talk about recognizing revenue. I have seen some clients doing some things that worry me. Now, this is completely an accounting gap configuration. Okay, and here's the guy. I'm sick and tired of generally accepted accounting principles. Now, I can't tell you whether this is your accountant or how you feel about them, but I'm certainly in that class with you. But recognizing revenue is a little tricky, and I've seen some things that concern me with my clients and the business owners I'm talking about. Revenue is recognized when you get a payment for products. You take the payment, they get the product. Monthly payments, where you have an installment contract, you get the money each month, that's a payment. You can recognize it. Retail payments are usually cash. Those are paid and you deliver the goods. Payments for services when they're completed. So you provide a consulting service for your client and you bill them and then they pay the invoice. All of those are good revenue recognition rules. What is not revenue? If you get a deposit, let's say you're having an event and you get a deposit, that is not actually revenue until the event occurs. Now, there are some ways to change that. You can say that the deposit was for pre-event planning. You can set milestones in your contract that says that the deposit is revenue that you recognize for the planning of the event, or you're paying using that money for the event, so you can take whatever your percentage margin is on top of that. Prepaid invoices. This is similar to deposits. It's for something in the future. And so you got to be careful about what your invoice says. If that money is recognizable as revenue to you, or if it still has to sit on your balance sheet as revenue yet to be earned. Now, MRMRs, monthly recurring revenue. This is where a lot of the clients that I work with, especially coaches, are getting caught. And annual payment for future delivery. Same concept on both of those. I charge $1,000 for my one-on-one clients. Okay, $1,000 a month. If I charge them that on January the 1st, I can collect that money by the end of January, assuming I have my client meetings and I've met my contract. Now, what happens if I haven't had client meetings? Is that revenue or not? Now, again, this depends on the contract and what it says. But annual payment, so let's say my client says, look, I'd rather write you a big check for the whole year. That way I'm committed. And I say, okay, you write me a check for the whole year, I'm going to only charge you $10,000. That is a discount, right? 10 versus 12. But I can only recognize $833 each month because I haven't earned all 12 months. Again, this is what your contract says, but I'm seeing mistakes made here where now, because cash is tight and things are harder in our economy, those clients are clawing back and they're saying, where's my money? I don't want 12 months. Where's my money? I didn't have a coach experience this month. I don't want to pay you. And all of a sudden, you're in a cash bind. So pay attention. It's a little scary out there right now, so be careful with your revenue recognition. Talk to your accountants, talk to your lawyers, make sure you have good contracts. That's it for me. I'd love to hear your stories, see if you're running into any of these issues. Otherwise, I'll see you next week.